From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 1st, 2016. In just a moment, we'll be taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days. Yesterday, in the live trade room, we discussed potential selling opportunities on the AUDUSD, the Australian versus the US dollar, on rallies into the resistance zone, the yellow shaded area. Well, if you were in the trade room yesterday, you'll note that we sold it right about the bottom of the yellow shaded area into the 72.45 or so level, 50 level, into the yellow shaded area. Of course, the market did fall in our favor. We saw the market push back down. We saw 25 to 30 pips of profit on the trade. Of course, Trade Manager taking us to break even. Then, of course, we had news yesterday out of Australia causing this to take a jump up, taking us out of the trade at break even. So we did see enough profit to protect the trade and go to break even, but unfortunately the market jumped up and took us out of the trade before we had an opportunity to collect some profit on the trade. So a break even trade, but a good trade nonetheless. If it would have taken a dive lower, of course, it would have been a very different situation and profit would be made on the Australian dollar. Yesterday's trade suggestion in the morning analysis video was selling on rallies in the resistance on the euro dollar. Well, so far it hasn't made it up into our resistance zone to take us into the pending order that we've had since yesterday. So still waiting on this one to see if it can jump up into resistance. Now, taking a look at our news calendar, we do have a couple of pieces of data today during the US session that could produce some volatility and some price movement, but I think today's news calendar is really just a calm before the storm. Tomorrow and Friday's news calendar look very heavy, and so we just have to be cautious and use appropriate risk strategies in any situation. So as we look at this, we were looking to sell into resistance. You can see if we take it down to the 4-hour time frame, never did quite make it all the way up to the pink shaded area for our sell opportunity. I still have the pending order there, and I think this still becomes an opportunity for us today if it can take a turn back up into the 1180 or so level. My pending order still sits at 111.75. Of course, the risk in this trade is that it breaks back above the pink zone and goes higher. So our stop loss should be up here somewhere above the pink shaded area to give us to stop the losing in case the market starts breaking above the pink shaded area. Of course, we'll target back down to the 111 level, the bottom of this black box on the 4-hour time frame. So we'll continue to watch that. Now, today's trade suggestion is going to be the opposing or the opposite trade to this euro dollar. It's going to be over here on the US franc. Over the past several months, we've been studying this downtrend channel between the double red trend lines. You see the red trend lines here, you see the red trend lines here. It was a falling trend channel. Within that trend channel, we saw rises along the blue trend line, falls, rise, fall, and most recently, we've been in the rise. We've been in the uptrend phase of the pattern. However, we've seen a little bit of a change where the market pushed above the pattern. Over here, we didn't see it. Over here, we didn't see it. Now we're above it, clearly above it. So we're still watching for some more upside here for the US franc. Forex Black Book is green, which gives us some bullish bias here. So we'd be looking for buys on dips into support with the upside momentum, the break above the channel, and the uptrend that we've been in. So buying is still going to be our main focus. That's the pattern of the trend. Zoom it in a couple of times, even here on the daily time frame. We can see the rise, the congestion in the blue box, the rise, the congestion in the black box. So again, if you're going to buy anything, you want to buy it at a low or a support. So at this point, our support is the purple shaded area, 98.85, 98.65. That becomes the area that we look for a new opportunity to go long. We know what the risk is. The risk is a breakback underneath that purple shaded area and it goes short. So our risk is fairly minimal and known that if it breaks underneath the black box, the purple shaded area, we would want to get out. So we can place our stop loss just underneath that purple shaded area and assess our risk fairly minimal there. We look for it to go back up towards the green zone, of course, as our initial target. But if we ever see the breakout back above the green shaded area, of course, we're going to target the next resistance level, which sits all the way up here towards the parity level, 1.0, where the pink shaded area is here on the chart. And I'll just pull that over a little bit as well. And of course, if it breaks underneath the purple shaded area, like I said, that's the risk on the trade to begin with. If it breaks underneath the purple shaded area, we'll look for it to head on back down towards the 9800 level, which is this orange shaded area down here. Let's go ahead and take it on down to the 4-hour time frame as we look for an opportunity to get into this. As we see, it's pressuring down now towards our support zone, the bottom of the black box, and our support zone, the purple shaded area. If it finds support here, we look for the market to turn back higher. Now, there's one of two ways to approach this. You could wait for it to establish this as a support again, 98.85 or so, establish support. What I mean by that is all you have to do is look back to the left-hand side just a little bit, and I'm going to put a little bit of a circle shape here on the chart. You just look back here where this circle is about to be, and you can see it established support. It's for several 4-hour candles, sat down on top of there before eventually the momentum reversing and going back up. That's one way to do it. The other way to do it is just simply look for it to dip down here into the support and buy it, and that's what happened the last time. Right here with his black X's, you can see it dipped down there, didn't really sit down there very long, and turned around and went back up. So you have two choices here. Either you wait for it to develop support like it did in the red circle, or just look for a buy as soon as it hits the 98.85 level. Well, I think with the trend direction, the pattern of the trend that we've seen, the support we've seen there, I think it's worth at least putting some risk here on the trade. So I'm going to go ahead and set this up. 98.85 is the top of the purple shaded area. So I'm going to go ahead and set this up with a pending order, a buy limit sitting down at 98.85. I'm just going to get it right on 98.85 and place the order there. So my entry, 98.85, right at the top of the purple shaded area. Of course, we know what the risk is. The risk is that it breaks underneath the purple shaded area. So again, we're looking at about 35, maybe 40 pips of risk. So let's go ahead and apply the trade manager as well. Let's go ahead and bring our trade manager window in, load in the set. And so I'm going to go down to the absolute max loss setting, and I'm just going to bring that down. I'm going to bring it down to 40 pips of max risk. That becomes our stop loss for the trade, and apply the trade manager. So now we have a pending order, 98.85, applied the trade manager. So when the trade goes active, from pending to active, the trade manager will jump in and manage our stop loss appropriately for the U.S. franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.